All right, folks. Heading into the market today, it is FOMC Eve, the Super Bowl of stocks, the big one, um, bigger than CPI. This is it. These days are so huge, it's crazy. And today we actually had a pretty sort of kind of action-packed day. We got some bad housing numbers, so that was pretty bearish. With SPY dropping at one point about 1.8% on the day, but ultimately closing just below 1% down. Otherwise, worth mentioning was the strength in the Nasdaq. The Nasdaq was actually kind of holding the market up today. Notably, Apple, of course. Apple still maintaining a crazy 1.5% green day on the day, with everything else being like red. It was just a bizarre day. Another one of these kind of days from Apple where they just holds the entire thing up. And now we have this pretty wicked looking rising channel here. See if I can see if I can actually draw it out. That we are just kind of scaling in on Apple. So I'm obviously watching for breakout, and then we're of course in this falling channel that is we could absolutely rip up and tap the top of this right here at 159.30. Maybe even go to try to fill this gap, this massive gap on Apple from 160.50 all the way up to 163.27. But anyways, I'm gonna cut this video into two parts. It's going to be the same video, but I'm going to talk about two different things. First part, I'm going to talk strictly about price action, strictly my levels going into tomorrow, setups that I love going into tomorrow, and then I'm going to talk in a more general sense, macro sense, about what exactly the Fed is going to do. Speculatively, of course, we don't know until tomorrow when when Powell himself comes out and tells us. But I'm going to plan for both scenarios and just jump right into that. But first things first, let's look at SPX. So SPX open with a big fat gap down. We got that housing news, which this is why this market is so like just it's been violently volatile. I mean, this price action we've had these past couple days has just been pretty wacky. Look at these three daily candles. I mean, just all over the place. And so we gap down on that. Massive gap down. We gap down right below this key level right here at 38.76, and then just dumped straight down to this support zone we have down here, right at 38.48 range. And then look at this. We rip up and we tap this level, just wick perfectly up to this level. I mean, bam, right up to that level at 38.76 that you can see in the past we have resisted off of, bounced off of it, bounced off of it. We broke through it here, but look at what happens when we lost that level. It dumped. Look at that. We tap it, resist, tap it, resist. We break and then we get sent. But you know that's a key level right there. So that's the level I'm watching to the upside going into tomorrow. Watching that 38.75. I'm going to come clean and say, I mean, obviously, I think it's going to be a bearish kind of day looking forward to tomorrow. But just because I could be completely wrong and the market just goes straight up. I think I'll wait until the second half of the video where I talk about that kind of stuff. But just price action wise, I think we could just get a crazy green day followed by a crazy red day, or a crazy red day followed by a crazy green day. That kind of just happens on these FOMC days. And right now, obviously, just looking at the daily, we're in the downtrend. I mean, obviously, we're going down. We've broken support, so it's a very bearish-looking chart. Got to remember that. No matter what Powell says, no matter what all the noise, the chart looks bearish. But my level to the downside. So we have the supply zone down here, or demand zone, I should say, where people are buying. In this, I'll make it nice and green because that's where people buy. There we go. So this goes all the way back over here on the hourly. Looking at this, you can see, where do we wick off it twice? We have a gap below at 38.16, but look at this. Buyer stepped up right here. We sold off, buyer stepped up right here, and this was a super important level because this was way back in July. This was where we pulled back, and if you bought calls right here, 38.20, this is where the market just shredded off of this level. I mean, look at this. We gap up off this level, and it just got sent all the way to 4,300, right? Yep, 4,300. So that's why this is another huge level. That's what's so crazy about this pullback is that we aren't heading towards new lows. We still have so many levels that we have to test and break through, and that's why it's been such a choppy downside. It hasn't really been just like a straight down. I mean, it never really over here it was straight down, but it's just been such a choppy downside because we have so many levels that we have tested so heavily that the bulls and bears have fought over so heavily, and they continue to. But for now, bulls are holding that level. Sorry, Mountain Dew break. Diet Mountain Dew Zero actually. So watching that level, that's a huge level. Zooming back into the 5-minute, also this level. So if we do break through 38.38, I talked about this yesterday in my video. We broke through it, but we held it. We bounced off of it. If we do break through that tomorrow, I have no idea where we're going to open. It could gap up like crazy. It could gap down. Who the hell knows? But if we do break through that, I'm absolutely looking for puts. And then I'm going to be hesitant about puts once we get into this zone. I have to watch and see what we do in this zone. And then obviously, going back to the hourly, obviously we have a massive gap to fill at the bottom of this rectangle. From 38.16 clear down here to about what's the high? 37.96. So we do have a big old gap to fill on S&P. And I anticipate that will get filled if we do see downside tomorrow. But I need confirmation that it's going to, because it could just rip all the way straight down to 38.16 and bounce off of there. And I imagine they would do something like that because everyone is holding shorts right now. Everyone's holding puts. Everyone's so bearish right now. The absolute most painful thing would be the most face-ripping green day tomorrow, and that is absolutely possible. But it's noteworthy as well that tech was stronger today than the S&P in general. Usually when you see that kind of stuff, it could be a little bit bullish. One thing worth mentioning today, we did wake up to this 50 SMA, so we got the sell signal when we dumped through this morning, but you couldn't really buy it because it happened in futures. Of course, that's what the market makers always love to do, right? They love to move the markets when the least amount of people can actually reap the benefits of it. But that's also another key level. 38.69. That's right where that yellow line is on the 30-minute. We break above that, bullish, just like what happened yesterday. Anyways, those are my levels on SPX. If we sit in this chop zone, 38.38 to 38.75, I'm not touching this thing. I need to see breakouts. And breakouts during FOMC are usually pretty bearish. Or, I mean, not bearish, pretty profitable if you're on the right side of it. But FOMC can always be a shit show. So, got to keep that in mind. I'm playing for both sides. I'm going in zero bias. Overall, bias bearish, but for tomorrow, for the 7.5 hour trading day tomorrow, you have to remember, just because if we go super green tomorrow, nothing's changed. We could still just flip around and we've had that happen so many times where you have a crazy green day after FOMC, followed by a complete nightmare the day after. So, gotta watch out for that. Alright, now looking at one of my favorite setups, Tesla. So I rarely trade Tesla. When I do, I get smoked, but I love to look at it, love to look at the levels because it does some things that are honestly super easy to see and not predictable, but it just makes sense what Tesla's doing right now. So, Tesla has a obvious supply zone up here where people are selling, sellers are stepping up right here. You see we wake up, sold out, wake up, sold out, consolidate a little bit, sold out, retested it, sold out, and now look what happened over here. Right here at 308 or 309, tried to break out of it, sellers stepped up, tried to break above it, sellers, and then we finally break above it, but not for long. We only were in there for a couple hours before the sellers took us out of that, and now we're closed right below it. After hours, we're sinking down. And Tesla has a big ol' rising wedge right now. Let me make these lines a little bigger. We got a big ol' rising wedge on Tesla that is just, like, I had this line set up yesterday, this trend line from this point to that point, and look where we waked up. We waked right up to that, and not only did we wake up to that level perfectly, but we got a perfect tweezer top right there. Bam, bam on the hourly. I know somebody saw that. I did not see that happen. I was just watching it elsewhere, but somebody saw that tweezer top. You see a tweezer top like that on the hourly, that is like a buy puts, and look what happened next. Look at the next hourly candle. Boom, dump, see ya. So, gotta watch out for that on Tesla. We break below this level right here. So we break below this pink line I have drawn out right here, 305.39. I think Tesla is money, money, money for puts. And you can see why the supply zone is so huge if you zoom. Undo. Lock. If you zoom way out on Tesla, you can see in the past where the supply zone is held up. Way over here, way back in April. You see this. Look at this. We sold through the supply zone. We try to get back in. Sellers say, nope, back out. It breaks out over here. Sellers say, nope, back out. I think that was actually an FOMC day right there. Yep. May 3rd. No, May 4th. Was this May 4th? Ah, yes. Look at that. Perfect. So look at this is what Tesla did the last FOMC. This is so crazy. I cannot believe the stock market does these kind of things. So, or not last FOMC. This was about 3 FOMCs ago, May 4th. Right here. We got a crazy green day May 4th. And then what happened? Right in this very same supply zone, mind you. So they could replay the same exact script. They've already given us the script on what's going to happen. It tried to break out of the supply zone. Very next day, sellers were like, no. And what happened next? Just straight down from 300 to 204 in the matter of about 3 weeks. I mean, that was just a bloodbath. Let's look at the NASDAQ, actually. I want to see if the NASDAQ did the same thing back in May 5th. Oh, yeah, it did. Oh, yeah, it did. Look at this. No, that's the 18th. Oh, yep, right here. See this? Boom. Big old supply zone right here. And so, this was the last FOMC. We got May 4th FOMC. I can't exactly remember if that was I'm pretty sure it was a 75 basis point, or it might have been a 50. For whatever reason, that day, the market was super green. I mean, crazy green. Look at this. Look at this candle. FOMC comes out at 11. Let's go to all the way over. All the way over. So FOMC comes out at 11. Look at that. Boom, we get a big old hourly doji, and then just crazy green from 319. We close up here all the way at 329. The Nasdaq made a 3% move. Everyone's thinking this is crazy. We're so bullish, right? And then the very next day, gap down, and it was just a bloodbath. Just all day. We gap down from 329, and we end up closing way over here at about 309. Just a monster red day on the NASDAQ. So this is the FOMC. This is what we're signing up for when you try to trade the FOMC. Just know it is going to be peak volatility. This was a 5% red day that last FOMC, or not last FOMC, 3 FOMCs ago. But then over here on the 15th of June, same kind of thing. We got a crazy green day, gap down the day after. So FOMC can just be a bit of a nightmare. And then, of course, the July 26th one, or 27th, I should say, was crazy green. And that was when Powell was sweet talking to everyone. So that's what I'm seeing on the NASDAQ. Apple, it's going to be a long video. Apple, we are right on top of that range, or heading towards that range. We resisted off of this pink line I have drawn here. We got kind of an ugly bounce off of that at 157.07. So I'm watching for that level, but then an obvious breakout from this uptrend that we're in, and I like Apple to the downside a lot. I think it's just been ridiculously strong the past couple days for really no reason. So when Apple is doing stuff like that, I mean, the fact that the market in general was down 1% and Apple is up 1.5%, that is like alarm bells ringing in my head, like something bad is about to happen. Already talked about Tesla. Anyways, VIX. VIX was elevated today, up 5.5%. So like I said yesterday, VIX up here in this 2850 range, and we're heading places. We are not heading in good places, mind you. We are going to see some dumpage if we break out above 2850 on VIX. The dollar was strong today. Obviously, dollar up 0.5% today. Super bearish for the market in general. I mean, you can just look at when the S&P rises, the dollar's going down. When the dollar goes up in value, S&P drops, and dollar is definitely breaking out of a pretty nice little. Oh yeah, it's breaking out of that. I mean, the dollar's going for the next leg. This shit just looks so bearish right now. It's crazy. That's why I think tomorrow's going to be a like wacky face ripper green day. So anyways, let's talk about the overall macro sentiment. So I am curious as to how much the market is priced in. So I hate when people say, "Oh, that's already priced in. Inflation's priced in." But stuff like this actually can be priced in. There's actual metrics to tell us that things are priced in because the market has expectations that these things are going to happen. So the bond market right now is telling us it is 80% certain that we are going to get the 75 basis point hike, and it has been up there since way over here back in Jackson Hole, and then certainly since we got that CPI data. That very much like raised those odds. I think the market was at about like half and half, 50% certain about a 75 basis point, and it was like hopeful that we were going to get 50. Now, mind you, this last FOMC we had way back in July let everyone think that maybe the Fed was only going to go 50 basis points. So what did the market do? It went from 394 straight to 430 or 4,300 on SPX. So it was pricing that in, but then we got that Jackson Hole meeting. We bounced off that 200 moving average up there, and then the market was like, "Oh no, actually, maybe we were wrong, or not wrong, but maybe we overestimated how dovish Powell was going to be." We dumped. We got the crappy CPI data. Then we're like, "Oh yeah, we're definitely getting 75 basis points." So when the market is expecting something, that usually means it's already priced it in, factored it in, it's sold off, and now we're down here. We're way down here, the lowest point we've been since we dumped off of August. So those things kind of make me think that if we just get that 75 basis points, now what causes crazy selling? Unexpected news obviously causes crazy selling, like we saw when the CPI data came out. Completely unexpected. Everyone thought inflation was going down. It turns out it's not, so we dumped. Then that is why we got our crazy sell-off, because it was unexpected. But we're expecting 75 basis points. But then you gotta ask yourself, how much can the market take? I mean, 75 basis points is very aggressive. It's still super aggressive. It's the most aggressive Fed we've had in decades. So the market is it like, how much can you price in terrible news like that? It's hard to argue that. But you gotta remember, this all can happen within one day. If we get the 75 basis points, which we're expecting, and Powell comes out and says some nice things, the market can forget for about 2.5 hours. I mean, from 11 to 1, it can forget how bad everything is and just be so near term or so short term excited that we just go straight up. And that would be so easy. It would be so easy to make that happen because of how many people that are in shorts right now. If you get a short squeeze going with crazy momentum tomorrow, we could just get a like I can't even say it, monstrous, crazy green day. If that happens, I would be super skeptical of it because we know it has done that in the past. We've absolutely seen it happen in the past because we saw it happen over here. SPY went up 3%, next day went down 3.5%, and then we just tanked. And all things considered, where we are on the chart, we broke through the support. We're absolutely in a downtrend. We're absolutely looking for new lows, most likely. And then we are absolutely being held up by stocks like Tesla and Apple, which just refuse to go down, even though we've had these red days. So that's why it's very important to keep track of Apple, because Apple starts to tank, and just know that things are not going to look pretty. Anyways, so how much has the market priced in? Have we priced in the 75? Is the market going to be thrilled when we get that? It all depends on a lot of things. It depends what Powell comes out and says, because we got the press conference. So what's he going to get asked? He's going to get asked all these terrible questions, and the entire time he's going to have to say, yeah, it's going to be painful. It's going to be rough. People aren't going to be happy. The housing. So we got the housing numbers say, and that already confirmed that the housing market is slowing down. The housing market lags stocks by like years. I mean, it's slow. So when housing is just now starting to slow down heavily, that means we're in for a world of hurt in the housing market, which is good. It's deflationary when housing prices come down. That's great. But it's painful for the equity markets in the meantime, and that's why we dropped so much today. Or not that much, but that's why it was bearish news. God damn it, I got an eyelash in my eye. So we priced in this hike. Kitty, not now. I'm trying to record. We priced in this hike, but how many hikes have we priced in? That is the unknown factor. That's the main big factor, is we know 75 is coming this, or God forbid we get 100. Who knows? Maybe Powell, that's another thing. Maybe Powell just is like, I'm so sick of these idiots in the stock market. These people not take me seriously. He needs people to take him seriously. So maybe he comes out and just says, I don't give a fuck. 100 basis points. Everyone go cry about it. The market panic sells tomorrow. We drop 8%. Who knows? We hit a circuit breaker. It could happen, but something tells me Powell's not going to do that. But anyways, the next hikes after that. So we have this meeting. We don't hear from Powell the entire month of October, or we don't hear from FOMC the entire month of October. And then the next meeting is November 2nd. So the market is going to be very, very attentive to what Powell says and look for clues as to how much he's going to raise in November and December. And that is very, very important. That's honestly more important than the actual rate hike that they're doing tomorrow, because the market is so unknown about that. They know that we're getting 75 basis points, but it doesn't know. It's hoping for like 50 basis points in November and maybe 25 in December, but it doesn't know. If Powell just straight up comes out and says, hey guys, I'm going to do 75 basis point this month, November, and December. That's going to be a 2.25% addition to the Fed funds rate. I mean, that's some serious shit. That's a lot of freaking hiking. That's aggressive. That is hyper aggressive. And the market, way back over here, you can see where it started to rally this last FOMC meeting. Way over here, it got crazy happy because he kind of made it sound like, hey, maybe we'll pause rate hikes by the end of this year. But then he came out, Jackson Hole, and was like, nah, you guys didn't really listen to what I said, did you? I meant like if inflation comes down, we're gonna pause rate hikes. And then what happened? Then we got the CPI data telling us inflation ain't coming down. So that's the troubling part, is what are we gonna do the next meeting? So that's why I think the initial bounce or dump from 11 a.m. Pacific is when this when it comes out, when they announce what the hike is, and then the market waits till 11:30. Powell comes out and talks, and then we have an hour and a half of complete chaos as he gets asked a bunch of questions, answers them, and the market literally reacts to every word he says. So that's what you got to watch out for. And these last FOMC meetings have honestly been, if you fade the initial move, if the market dumps, buy calls. If it shoots up right at 11 a.m. for like that first 5-minute candle, you do the inverse. You buy puts, and that's honestly been working. I've had some of my best days on FOMC meetings because that just has been so easy. But you'll know when the market picks a side. It makes it pretty clear. It's a lot. It's insane candles. It's the most volatility all year, every time we get an FOMC. It's like the most like straight down, straight up, straight down. This crazy volume. It's nuts. But if you inverse it, it's usually a good sign. But it's kind of why I think, honestly, it's going to be like a crazy face ripper day. I think at first at 11, the 75 basis point is going to be bad. It's going to dump for a very short time, and then we're going to go insane green. I think it's going to rip. I mean, we could rip straight up here to 39.50. Quote me on that, baby. I'm serious. Quote me on that. If we do, your boy told you it could happen. Especially since we're at such a strong level of support, of past support. So, gotta watch out for that. But we do know the Fed has flip-flopped a lot. So last FOMC, they came out sounding really dovish. This time, they can come out sounding super hawkish. Back in December, so this is back before I even started full-time trading, I was doing some research. Back in December, this is so crazy to think about now. They were so dovish. They projected that they would raise the Fed funds rate by the end of this year to only like 1.5%. That is what they initially thought they were going to do back in December. I mean, it's crazy. That was back in December 14th or 13th of last year. Obviously, they were wrong on that, dead wrong, and they have gotten super much more aggressive, and that's why the market's been selling off so much, because, hey, back then, look at this. And this is why the market dumped back here on the 15th. We got a big green day on that announcement, and then dumped after that from 4,700 straight down to 4,500. So that was a pretty big dump, but that was before I was like full-time stock trading, so I really didn't pay attention. But that just shows you how incompetent these people at the Fed are. I mean, they were like so naive. They were like, yeah, we'll raise rates like 1%, maybe 1.5%, you know. and then by over here in March and April, I mean, they were just like, shoot, sorry guys, did we say 1.5%? We meant 3.5%, and then the market dumped. So we know the Fed is flippy floppy, but it sounds like now they are trying to get very aggressive and try to convince everyone that they're aggressive. That's honestly half the work they have to do, is convince everyone that they're taking inflation seriously, because they cannot let people think that inflation is here to stay, because once that happens, it's inflationary. Once everyone is convinced, hey, every year my paycheck is going to go down 8%, so I'm going to ask for a 10% raise, that's inflationary. If everyone does that, and it's going to happen if it keeps going like this. I mean, people aren't just going to sit around and watch their money lose all of its value without changing the way that they approach getting raises, approach spending their money. So, Fed has to really hammer it into our little brains that they are serious and they're not fucking around. They're going to hammer inflation, pound it down. So, all that considered, good luck to everyone. I love Tesla to the downside. I love the market in general to the downside, but you guys gotta be vigilant. We could get a crazy green day. You gotta be vigilant. You cannot go into tomorrow being like, I'm gonna short the market no matter what happens, because anything can happen. Powell can come out and just be like, hey guys, we're wrong. We're gonna drop rates to zero. I mean, it's not gonna happen, but it is just a crazy market where the initial reaction could be the exact opposite of what you'd think, and then if you just would have waited a day, you'd been 100% right. Like, this is the stock market. This is not a binary thing at all. It is not just it. Bad news means it goes down. Good news means it goes up. It is. It could be up is down, down is up. Just got to be careful. I mean, this has been a crazy volatile year, and I do not expect tomorrow to be any different. And now, considering how many people are sitting in shorts, I mean, just think about how many people have shorted the market since we broke through here. So many people. There are so many people in puts right now. What would destroy the most people if we just rip the market straight up? So, gotta watch out for it. I can't say it enough. I mean, wouldn't that just be hilarious if we just rip straight up from here? I mean, they absolutely could do it. They absolutely probably will do it. I'm not even fronting, but watch out, because we could just dump straight down and head straight down to 3760 tomorrow. It's absolutely very, very easily possible, but be careful. Just be careful. Don't go full size. Honestly, the day after the FOMC is better trading than the day of, and you just got to be careful and watch out. So just have your level set, wipe all bias, have your plan. It's all about having a plan. My plan is, I'll tell you exactly what my plan is. My plan is, if we re-break this level here at 38.38, I'm buying puts. If we break this level to the upside, 38.75, with this fat gap to the upside, I'm buying calls. Anything in between, I'm not touching. I don't care. And you'd have to put a gun to my head to buy anything in this range, because it can just be a crapshoot. And that is my plan for tomorrow. If that doesn't happen, if we just top around here, I'm not doing anything. And that's just the way it is. So, have your plan. Do not change your plan. If you're only going to trade the downside, that's your plan, then I don't care how green it is tomorrow, do not change your plan, because changing your plan is the guaranteed route to failure. Anyways, guys, good luck tomorrow. Happy FOMC Eve. Let's have a crazy good day. Drop a like, drop a sub, drop a comment if you want to, if you watch this whole 28-minute saga. But thanks for watching, guys. I'll catch you later.